Good morning traders, good evening, good afternoon. This is FXPassion broadcasting you live on YouTube. This is Forex trading for beginners. So good morning to Melbourne, good evening to Singapore, good afternoon to Madrid and London, England, and good morning or good midday, whatever, to Toronto, New York, 11 o'clock a.m. Everybody, this is Forex Trading for Beginners, where our goal for you is to become consistently profitable, minimum 3 months, knowing when, how and why you make and or lose money. You should not be allowed to trade with real money until you reach the goal. What is the goal? To become consistently profitable, minimum 3 months, no losing months in between. If you are not going to listen to us, here is the risk disclaimer: don't trade with money you cannot afford to lose, and the webinars are not investment or trading advice. They are for educational purposes only. Your job is to question everything and don't be fooled, and try to understand that trading is 80% emotional and only 20% technical. So in order to be successful at trading, you need to have your mind, set of rules, a strategy, a system, and your heart. You need to manage your emotions in the right place. And remember, if being consistently profitable is difficult or challenging, you probably still have things to learn. And if your way is not working, why don't you try ours? Just give it a try. Remember, 90% of traders who makes it between the 3rd and the 5th year of learning. For homeworks and or coaching and or training or just questions, you have the Gmail contact, the Skype contact, and the LinkedIn contact. So that being said, everybody, I talked this morning on Skype to a trader and he asked, can you explain how to manage the trade again? And I said, yes sir, of course. So give me a trade, everybody. Give me a trade. If not, I'm going to go with mine. But if you can, please give me a trade. Give me an entry, a stop loss, and a take profit. If not, I'm going to go with mine, okay? So yes, we're going to talk about bullish and bearish candlestick formations, but we are going to talk also how to manage the trade, right? Trade management. Eddington says AUD USD, AUD USD, AUD USD, great. AUD USD short trade, okay. AUD USD short trade, great. Okay, so 2 hour time frame, 1 hour time frame. Okay, so let me see what can we do. Okay, so this is going to be our uptrend line, right? And for this is the 2 hour chart. So 1 hour chart, maybe 1 hour chart, let me see, 2 hours. Okay, but I cannot make an example, Eddington, of this trade because it's in the beginning right now. So I need some other, I need more swings, you know. I need some other trades. Does anybody have any other trades that is not just happening but that you were enter starting from Monday, maybe Tuesday? I mean, we can address later AUDUSD, no problem, but just to explain. Okay, if not, we are going to go with USD CHF 1 hour chart. Okay, just for this purpose. Okay, so in the meantime, if somebody else is going to put in the chat. Okay, everybody, so let's explain how to manage the trade, right? So we have an uptrend line. This is USD CHF pair 1 hour, and we are going to go very slowly for the beginner trader. Okay, and when you manage the trade, everybody, you need to believe, you need to follow the concepts, right? So concepts. Number one, it's not a secret, you know already. It's let the profits run and cut the losses short, or cut the losses as soon as possible, right? Cut the losses short. I mean as soon as possible, Concept number two, never let a winner become a loser. This would be number two. So we should let the profits run and cut the losers, and never let a winner become a loser, right? So when we trade, those are two of the basic concepts in forex trading, also in other trading, maybe, I believe. Okay, so we are trying to let the profits run and cut the losses short as soon as possible, and never let the winner become a loser. Okay, so we are going to deal with two variables. Okay, we are going to deal with stop loss and take profit. Now let's talk about stops. Okay, stops. We have, number one, we have the so-called numerical stops. Is when we say, well, I want to lose 50 pips. If I'm wrong, I want to lose 50 pips, or I want to lose 2%, or I want to lose $10, whatever. So we have the numerical stops, right? And number two, we have the so-called technical stops, which are the infinity. We have the trend lines, right? Highs / lows. We have the, what could be, stochastic. We can use the EMA cross, you know, and so on and so on and so on. Okay, so in trade management, everybody, we have the concepts. We should let the profits run and cut the losers short, right? Never let the winner become a loser. And now we have two kind of stops. Numerical stops, 50 pips, 2%, $10, whatever. And we have the technical stops, trend lines, highs and lows, stochastic, parabolic SAR, whatever. Why do you want to lose? Because sometimes I am going to lose. Everybody, numerical stops are okay, but they are not the best. Okay, so let's write this down. Okay, numerical stops are okay. Why are okay? Because we want to protect ourselves, right? Numerical stops are okay, but technical stops are better. Okay, I'm going to explain you why, but I want you to believe in this. Okay, numerical stops are okay because we want to protect ourselves, but technical stops are better. Okay, so that being said, we're going to perform a trading exercise, and we don't have the crystal ball, right? Okay, so this is USD CHF 1 hour chart, and the market is still moving up, and right now in here the market broke the uptrend line. Okay, the market broke the uptrend line, and just for this example we have here double tops. Okay, double tops. The market wanted to go up, it didn't manage to, and we are here right now. So we are going to enter in here. This is going to be our entry point. Okay, so edit label, this is going to be our entry sell. Okay, our sell entry. Okay, so okay, you don't see, let's make it bigger. Sell entry, this is going to be our sell entry. Okay, now very slowly, we said that we have two kinds of stops, right? So numerical stops are okay because you are going to protect your capital, but they are not okay because they cannot follow everybody. The numerical stops cannot follow the never let a winner become a loser. They are difficult to follow the concepts. Okay, so and let the profits run. So numerical stops are okay. Yeah, I cannot say, oh, they are wrong. They are not wrong. There is no right or wrong, but they are difficult to follow the concepts. Okay, because if we entered in here, let's make another, let's see the numbers, and let's make this in black. Okay, if we enter at 1.00796 and I'm going to say, well, I want my stop to be 50 pips. Okay, so 79, so plus 50. Okay, so it's going to be, let's put 80, it's going to be 108, and so what's going to be 1080, right? So it's going to be, or let's say pipettes, whatever. So 796, right? It's going to be, okay, let's say somewhere in here, just for this exercise purpose. Okay, so from 796 to 900, I say, well, I want my stop loss to be what, 100 points, 100 pipettes, right? Okay, 10 pips, 50 pips, whatever. It's just an example. And a technical stop would be, number one, if the market breaks my downtrend line. It's just an example. Okay, this is a technical stop. If the market breaks my downtrend line, the red line. Or another technical stop would be if the market breaks the most recent high, right? Because the market is making higher highs, higher lows, lower highs. So another stop would be, well, if the market is going to break this high up here, then most likely it's going to continue its way up, right? So we have the numerical stop. It's just an example, could be 1%, 0.5%, it could be $10, right? It could be whatever. It's a number, okay? But numerical stops, they don't explain anything. This is why I believe numerical stops are okay, but are not the best option for a trader. Okay? So we entered here and we're going to use this one, the concepts. Okay? So we enter the trade and let's see what is going to happen. See what happened right now. Your numerical stop, you were stopped out, right? So it could be anything, anybody, but numerical stops are not the best option. They are an option, but they are not the best option. Because if I put 0.5%, 1%, 10 points, 200 points, whatever, it depends on the time frame, the market is going to take me out most likely 9 times, But if I have my technical stop, even though the market is going against me, I'm safe, right? Because if the market is going to fall, the market shouldn't break this higher high. So I'm still safe, right? And let's see how it's going to play. Okay, so the market is falling. Now I'm going to extend my downtrend line, right? And what I'm going to do, everybody, right now I'm going to clean up my numerical stop. Okay, let's clean up the numerical stop. We're not going to use numerical stop anymore, and we are going to clean the uptrend line. So we are in profit, right? Okay, so we are not going to move our stop. Now this is trade management. We are not going to move our stop, not yet, because if you move your stop to break even right now, okay, if you move your stop to break even as soon as possible, you know, because you are afraid and, oh my gosh, what if the trade goes against me, I'm going to lose. Well, if you are on the wrong side of the trade, you are going to lose anyhow. So we are not going to move our stop loss right now, right? We are using the technical stop. So we are in a trade. Let's wait. The market is moving up, going sideways, right? Moving down. Okay, so now here is the next low. When this happens, everybody, when you have the next low, we are going to extend our trend line, right? So you have two options right now how to manage your trade. Number one, you can put your stop loss above the downtrend line, okay? And this is the concept. Or you can put your stop loss right now above the most recent high. Okay, this is called the so-called cancel and replace your stop. And if you want something more technical, as a stop out level, you can go to the indicators and you can put EMAs on your chart. Okay, I'm going to put the 8 and I'm going to put the 21. So period exponential moving average. I have two EMAs. One is 21. Let's color code this in green, just an example. You can play around with your colors and everything. So now I have three technical stops. I have number one, the downtrend line. I can use it as a stop. I have the highs and lows as a stop. So I'm going to cancel and replace my stop every time the market makes a new low. Okay? And the third stop would be where the exponential moving average is going to cross one another. So I'm using three different stops techniques, okay, and there is no right or wrong, but technical stops are better, right? Because they are allowing to the traders to follow the concept. So if I'm doing this, I'm letting my profits run, right? And if I'm going to cancel and replace my stop, my winner is never going to become a loser, right? So I'm in a trade and I'm just letting the market do its thing. So if I'm right and the market is going to continue to fall, I should be able to capture more pips, right? So the market is here. I'm not doing anything more. I'm just monitoring the market. So in here, this is the most recent low. Let's color code this in blue. Okay, this is the most recent low, so I'm waiting for the next low. Okay, the market fall. Now here is the next, not a low. We need two candles on the left and two candles on the right. So the market's still falling, and right now we have a new low, right? So for the trader who is cancel and replacing the stop with the trend line, he is going to extend the trend line. Yes, he is going to put his stop loss 10 pips above the downtrend line. For the trader who is going to cancel and replace with the highs and lows, well, this is now the most recent low and my most recent high is up here. So I'm still letting the profits run, and from now on, right, from now on I have no risk. I have no risk anymore. Even the market is going to go against me, I will end in profit, right? So the trader with the trend line, yes, he's still risking because he's following the trend line and there is no right or wrong. But the trader who is canceling and replacing, he has no risk anymore. If the market is going to go against him, he is going to cancel and replace, okay, his stop. Now, the third trader, he is waiting for the EMA cross, right? Now, oh, Passion, how can we make better profits? Well, the answer is you can go to the smaller time frame, everybody, with the same technique. Okay? So if you are going to enter on the 1 hour chart, you can go to the 15-minute chart, right? So if this is the 15-minute chart and we are using the same technique on the 15-minute chart, what you are going to do, when you are going to have more highs and lows, and you can replace your stop loss. So this is still here is the most recent low, the blue line, but the most recent high is here, right? So you can micromanage the trade and there is no right or wrong. Okay, you can do this on the 1 hour chart, which is your trading time frame, or you can go on the lower time frame and do the same thing. So, but I'm following the concepts. This is the bottom line. I don't have any risk. If the market is going to take me out, is going to take me out in profit, right? So let's see, the market is moving, let's see what is going to happen, and the market is moving up, up. Okay, now trader number three, he is out. Why? Because we have the EMA cross, one exponential moving average just crossed the other in here. So trader number 3 ended with this profit. Okay, the other two are still waiting to close the trade. Okay, so trader number 3 is out. Now let's see what is happening here. The market is moving up and falling down. This is the most recent low. We want to see another low, lower than the most recent low, right? So the market is moving sideways, moving up, right? Moving up, low, high, right? Sideways, and we are here right now. So it depends where your stop loss is. If you have exactly to the pip with the high, maybe you are stopped out. If you would put your stop loss 10 pips above, you are still in a trade, and the trader number 1, which goes with the trend line, is still in the trade, right? But sooner or later this market is going to fall, right? So trader number 3 is out. He pocketed out this. If the market is going to stop loss, is going to stop out the second trader, this would be his profit, right? If the market is going to stop him out, so he doesn't have any risk anymore. Okay, and if the market is going to go up and up and up. Well, the trader number one who goes with the downtrend line, right, is going to be stopped out and without a profit. But anyway, his risk was lower, right? So this is just one trading exercise, and we were in this trade this week. We entered shorting USD CHF. Okay. Now another currency pair that we are trading this week is the NZD CAD. NZD CAD, and we're going to do the same 1 hour chart. Okay, we are still in the trade. We are still in the trade on this one, and this is the uptrend line, right? This is the uptrend line. Okay, uptrend line. So we entered, everybody, we entered, let's color code this in black. We are still in the trade. Okay, this is the uptrend line, and what is this, everybody? Is this a bearish candlestick formation? What do you think? What do you think? Is this a bearish candlestick formation? The circle is pointing. Is this a bearish candlestick formation? The market broke with the uptrend line, and we entered in here. The question is this or is this not a bearish candlestick for? Yes, which one? Which one? Engulfing, yes sir. So we entered in here. We entered, let's color code this in green. We entered in here, right? So let's manage the trade. We have a downtrend line in here. Let's color code this in red. And like this, we're going to erase the uptrend line, is not valid anymore. Okay, so this is, the green is our entry, and our initial stop, everybody, was a technical stop. Is what it was up here. This was our stop, right? So if you are a beginner trader and you are talking to an investor or a follow trader, well, why did you put your stop loss up there? Come on, man. You know why? Because this is a technical stop. This is the most logical area to put the stop, because if I'm wrong, the market is going to do what? The market, in order to wave, to continue its trend, it must make a higher high. Lorenzo, I actually entered this trade with the daily candlestick formation. Great, great, congratulations. Where is your stop, Lorenzo? Lorenzo, tell me where your stop is on the daily. So NZD CAD daily chart. Daily chart. Great. Where is your stop, Lorenzo? And there is no right or wrong. Don't worry. Oh man, he's going to destroy me. No, no, there is no right or wrong. Okay, we are just talking about numerical stops and technical stops. Okay. Okay, this is Lorenzo's stop is at coordinates 0.9150. Okay. Lorenzo, my friend, you moved it already. Okay, where was your initial stop? Where was your initial stop? Okay, so NZD CAD, let's address. We're going to see Lorenzo's stop. So this is going to be blue. The blue one is Lorenzo. Okay, edit label Lorenzo stop. Okay, and it's at coordinates 0.9150 above the top. Congratulations, great. Okay, this is Lorenzo stop, nice. Okay, so we are here right now, we entered the market. The blue line is Lorenzo stop, and if we are trading on the 1 hour chart, what we are going to do, we are going to micromanage our trade, right? You want to be out as soon as possible and you want to capture as much pips as possible, right? So we are going to have 3 different traders. One is going to go with the trend line, okay, there is no right or wrong. The other one is going to go with the moving averages. Again, we're going to draw another, so EMA cross, okay, red this time, red and green, okay, and the third one is going to cancel and replace its stop together with the most recent highs and lows. So our stop is still up, right? We don't have highs and lows, but I'm going to move. I entered on the 1 hour chart, but I'm going to move now on the 30-minute chart to capture more pips, right? Eddington says mine was 10 pip above the top. Great. Okay, so we are here right now. This is now the 30-minute chart. Let's see what is going to happen. Remember, we are going to cancel our stop only when we have new lower lows, everybody. If you cancel your stop to break even too soon, maybe the market is going to stop you out soon and then is going to fall. So be patient in order for the market to show you what is going to do, right? So if I put my stop loss to break even right now, well, I cannot say that this is wrong, but I'm not letting my profits run in this way. Let's see, I don't have the crystal ball. Let's see what is going to happen. The market went up and sideways, right? Sideways, and now we have a new low, right? Okay, so now that we have a new low, this is the most recent low. Let's color code this in black, and like this. This is the most recent low. If I want, everybody, I can cancel and replace my stop to the most recent high, right before the most recent low. Okay, so this is my stop right now on the 30-minute chart. Did I move my stop too soon? Well, I don't know, but what I'm doing right now, number one, I'm letting my profits run. So even if I'm stopped out, I will end up in profit. Okay, so when you trade and when you are managing your trade, you don't have the crystal ball and there is no right or wrong. Sometimes the downtrend line is the best option, like in the USD CHF. You know why? Because the trader with the EMA cross is out, the trader that is canceling and replacing the stop is out, but the trader with the trend line, with the downtrend line, is still in the trade. So if this market is going to fall big and trader number one is at work and trader number two is sleeping, well, trader number three is going to make more profits. Yes, but is risking also. Yes, it is. This is where we are telling you there is no right or wrong, and the perfect technique does not exist. Sometimes the EMA cross is going to be better than the cancel and replace on the highs and lows. Sometimes the stop loss with the trend line is going to be better than the other two. Okay, so NZD CAD 30-minute chart. Let's see. We are in the trade, we don't have any risk anymore, so my winner cannot become a loser anymore. So let's see, the market went sideways, 30-minute chart, sideways, and fall. Okay, we're going to wait to make a new low. Bam! Now we have a center candle with 2 candles on the right and 2 candles on the left. So this is now the most recent low. I'm going to cancel and replace my stop above the most recent high, which is here, right? And the trader with the trend line is going to adjust his stop like this. So both, I mean all of them, are still in the trade, right? The trader who is managing its trade with the moving averages, the trader who is canceling and replacing his stop based on the highs and lows, and the trader who is canceling and he's adjusting his stop together with the downtrend line. Those are all technical stops, everybody. If you want another one, you can throw, I don't know, you can throw the parabolic SAR if you want. What's the color? Green? No, let's make it yellow or something. Oh, line, okay. Shift levels advanced. How can I increase? Line, shift tool, value, transparency, levels. Okay, let's make it in black because I know how to make it bigger. Okay, so you have the points right now. The parabolic SAR goes with stop and reverse if you want. It's another technical indicator, but as you can see, it's not so good because you have the points from the parabolic SAR. You have here the points, right? The market was, here you have the points, the market was falling and falling and falling and falling, and here it appeared on the other side, so you would be out of the trade with the parabolic SAR. But it is a technical indicator, okay? But the technical stops, everybody, are the best option because they make sense. You know, if you want to trade on the right side of the trend and structure and the market making lower lows, lower highs and everything, well, the technical stops make sense. So if you're a beginner trader, even the professionals, you know, oh, the market stopped me out. Where? Well, the market just make a higher high. Well, then okay, nothing wrong, you know. But if you say, oh, I was stopped out, why? Well, because I want to risk only 20 pips. Man, why 20 pips? Why not 30? Why not 50? I mean, where was your stop? You know? Technical stops, in my opinion, of course, I don't have the crystal ball, but in my opinion and my experience, technical stops are much better than numerical stops. Okay, so we're going to delete the parabolic SAR because remove, okay, it's not so useful. So trader number 1 is still risking. Trader number 2, if the market is going to stop me out, this is my profit. Trader number 3 is going to go with the moving average cross. Let's see how this is going to play out. Okay, the market's moving up, right? Moving up and down and sideways. Let's see, moving averages are coming closer. Trader number 1 is extending its downtrend line. So let's see what is going to happen. The market is moving sideways, still sideways, and as you can see right now, even the trader number 1 is not risking anymore because he's just adjusting his downtrend line. So he's going to end in profit also, right? So let's see, the market is moving and finally the market decided to make a new lower low. So right now we are going to adjust our stop. So this is a new low down here. This is our new stop loss level, the most recent, I mean this is the high, You know, we're going to put our stop loss 10 pips above the most recent high, right? Is here, and if we are going to lose, this is going to be our profit. And the trader number one with his trend line still is going to go together, right? And let's see, the market is moving down again. Okay, this is on the, we entered, remember we entered on the 1 hour chart, but we are managing our trade on the 30-minute chart. So we have a new low, this is our new low, lower low, right? Lower low, lower high, lower low. So where is our most recent high prior to the low? Is here. We are canceling and replacing our stop. We are managing our trade, right? Trader number one with the downtrend line, still happy. Okay, and the trader with the moving averages is still in the trade. So we are here. Let's see what is happening. The market went up. Okay, fall lower, right? We want to capture as much pips as possible. So this is the most recent low, everybody, and we are still in the trade on the live account. Okay, and our stop loss is 10 pips or 100 pipettes up here, right? And the trader number one, which goes with the downtrend line, his stop loss is still in place. So we are in all of them, right? All of them are in the trade still. And the best part is we have no risk anymore, right? Now it's just a matter of if the market is going to fall or if the market is not going to fall. Do you have 2 candles to the right? Yes, sir. I do have 2 candles on the right. Yes, sir. Okay, this is how professional traders, of course you have mechanical traders, expert advisor, robots, quantum traders, whatever, but you have professional traders. This is how they manage the trade. Some of them go with the EMA cross, some of them go with the cancel and replacing the stop, some of them go with the trend lines, you know, some of them go with Fibonacci, some of them go with Ichimoku. You know, there is no right or wrong. You have thousands and thousands way of stops, but you have 2 types of stops. One is numerical and the second one is the technical stop. Okay, so if the market is going to fall again, then we are letting our profits run, and if the market is going to go up, we are going to close our trading profit. We are following the concept that our winner is not going to be a loser. Okay, Lorenzo, why don't you cancel and replace your stop, my friend? I mean, I'm not saying that you are wrong, I'm just curious. Why don't you lower your stop loss, Lorenzo? Lorenzo, why don't you adjust your stop loss? I did just use bigger time frames. Oh yes, sure, yes, sure, yes. Everybody, I just made a mistake, you know. And what is the mistake? Well, the mistake is Lorenzo entered on the daily time frame. Okay, Lorenzo entered on the day. Listen to me very carefully, everybody. This is how you are going to burn your account. Oh, Passion, you are so evil, you know. No, I'm try to understand this, everybody. I almost made a mistake. I said to Lorenzo, why don't you cancel and replace? Where is the error? What is the mistake? The mistake is equity management, everybody. if Lorenzo entered on the daily chart, this was his initial stop loss. This was his initial stop loss on the daily chart, right? This was his initial stop loss, most likely. Okay, and now, because I'm so intelligent, you know, I just suggested to Lorenzo, oh Lorenzo, why don't you cancel and replace your stop loss down here? And this would be a mistake from my side, everybody. Why is that? Because I'm suggesting to Lorenzo to take profits, and this goes with how to manage the trade. I'm suggesting to Lorenzo, okay, there you go, let's color code this in green. I'm suggesting to Lorenzo to take his profits on the 30-minute chart, right? So even though the market is going to hit my stop profit, let's say that Lorenzo is saying, okay, I'm going to cancel and replace, okay, and remember, he entered on the daily chart, everybody, and the market is going to stop him out. He's going to be happy, right? Oh, I made some money, I made some pips, right? FXPassion was right. No, FXPassion is wrong, because suggesting to Lorenzo to cancel and replace his stop on the 30-minute chart is going against the money management rules. So Lorenzo, you are right, my friend. You go to cancel and replace. If you are trading on the daily, you should cancel and replace not on the 30-minute chart, but you should, if you want, of course. I'm using the 4-hour chart for trade. Great. Yes, sir. Yes, sir. See, Lorenzo, you are more intelligent than me, you know. Yes, sir. Congratulations to you. I almost made a mistake, everybody. Lorenzo is intelligent. He said, no, wait a minute. I cannot cancel and replace on the 30-minute chart. Well, you are suggesting me to risk more than I'm making, right? So he is using the 4-hour chart for trade management. So let's see on the 4-hour chart. Eddington is asking, what is your preference on this pair, cancel and replace or trend line? Always, but this is my style, Eddington. My style is always cancel and replace, or sometimes I'm using the EMA cross. So Lorenzo is using NZD 4-hour time frame, right? Okay. So the 4-hour time frame didn't give you, Lorenzo, not yet, didn't give you any swings, right? For canceling and replace. Okay. This is the 4-hour time frame. You don't have any swings yet. You don't have any, I mean, you have the lows, but you don't have any highs, right? So you can go with the downtrend line if you want. This would be the downtrend line, right? If the market breaks the downtrend line, or you can use the EMA cross if you want. So let's put the EMA 8 and 21 would be the other. Okay, edit indicator 21, EMA cross, green, okay. So until the EMA cross, you are still in the trade, you have the downtrend line, or no, just using the trend line right now. Yes, sir. Great. Great. There is no right or wrong, but if you are using technical stops, you are going to be much better, you know. You're going to capture more pips, you're going to be more profitable just using the numerical stops. Everybody, some of you are using the trailing stop. Trailing stop is a numerical stop, is not bad, okay? Is not bad, but it's not the best option. Trailing stops are numerical stops. They are not the best option, okay? So back to the trade. the original trade, and we are here right now. This is the NZD CAD. We are still in the trade, right? We are here on the live account. This is our stop on the 1 hour chart. I mean on the 30 minutes we are managing the trade, right? And now 1 or 2 things, maybe 3, are going to happen. So or the market is going to go up a little bit and make a new low, then we are going to cancel and replace our low to the most recent high prior to the most recent low, right? Or the market is going to shoot up and stop us out, which is okay. We end in profit and we are going to wait and try to re-enter on the next opportunity. Of course, we need to check the higher time frames and everything, right? So if the exponential moving average is going to cross, again, we are going to check the highs and the lows, but we are going to close our trade most likely. And for the traders who are following the trend line, well, it's the same, right? You are going to wait. Maybe the market is going to break your trend line and stop you out in profit, or maybe the market is going to go up, you know, touch the downtrend line and continue its way down, right? So what's the difference? The difference is in work. The trader with the downtrend line is drinking his Cuba Libre, right, on the beach, and he's just looking at the chart. You know, me and the other traders, we need to work. You know, I need to manage my risk, make the calculations, you know, address the risk. Where is my entry? Where is my stop loss? Where is the profit? Is the take profit near a pivot point or support level? But the trader with the trend line, you know, he's just enjoying the ride with the trend and he's relaxing right now. And yes, there is no right or wrong, they're just different techniques. Okay? Okay, everybody, we are closing the lesson for today. Oh, Eddington said, I almost forgot, AUD USD short. What time frame, Eddington? What time frame? 4 hour chart, 1 hour chart, daily chart, 2 hour chart. So let's go on the daily first. Trading time frame, confirmation time frame. Daily chart, the market is up, the market is down, lower lows, lower highs, trend line, and I'm going to break the candles most likely. So down trend line, somewhere in here maybe, right? This is the downtrend line. The market is moving down 2 hour. Eddington, where is your stop? Where is your stop? And when did you enter? Where is your stop and when did you enter? This is the daily chart. Not in yet. Okay, where is going to be your stop? Where is your stop going to be when you enter on the 2 hour chart? So this is the daily 2 hour chart. Okay, where is your stop going to be? Above the most recent high. Great answer. So Eddington is using a technical stop, everybody, not a numerical, right? This is going to be his stop. Okay, so what are you waiting for? You said that you are not in a trade yet. What are you waiting for, Eddington? Explain to the other traders, what are you waiting for? On the 2 hours we have a counter trendline break, and as you can see, everybody, we have the market making higher highs, higher lows, higher highs, higher lows, higher highs, lower low. Waiting for the waiting for the webinar to end. Okay, great. Okay, everybody, tomorrow we are closing our candlestick formations, trading Japanese candlesticks. We are closing this topic, so tomorrow is the last day for you to post questions, make questions. Next week we are starting with the trading week, and next week we are going to start with the Fibonacci's. Okay, so tomorrow we are closing the candlesticks, the bullish, the bearish, you know, bullish uptrend, bearish down structure, all of this stuff. So until tomorrow, everybody, stay strong and trade with passion. This is FXPassion signing off.